Tov. Hello everyone, and welcome back to the channel. Today, we're diving deep into the Forex markets, breaking down the key pairs you need to be watching: EUR USD, GBP USD, and USD JPY. We'll cover everything from the fundamental drivers to the technical setups, and most importantly, how to manage your risk in these volatile times. So grab your coffee, get your charts ready, and let's get started. First up, let's talk about the euro versus the US dollar, the EUR USD. Fundamentally, the European Central Bank and the US Federal Reserve are on slightly different paths. The Fed has been signaling a more cautious approach, keeping an eye on inflation data before making any big moves. Any hint of rate cuts being delayed could strengthen the dollar. On the other hand, the ECB is also navigating its own economic landscape, with inflation and growth figures across the Eurozone playing a huge role. Key data points to watch this week will be the latest inflation numbers from both regions and any speeches from central bank officials. These will be the primary catalysts for movement. Now, let's look at the EUR USD chart from a technical perspective. We've been seeing the pair trade within a well-defined range. A key resistance level is holding firm around the 1.09 mark, while major support can be found near 1.0750. A decisive break above that resistance could signal a bullish continuation, potentially targeting the 1.10 psychological level. Conversely, a breakdown below support might open the door for sellers to push the price down towards 1.06. I'm also watching the 50-day and 200-day moving averages. A golden cross or death cross on the daily chart could provide a longer-term directional bias. Right now, momentum indicators like the RSI are hovering around the midpoint, suggesting a bit of indecision in the market. This means patience is key. Wait for a clear breakout or a rejection at these key levels before committing to a trade. Moving on to the British pound versus the US dollar, or GBP USD, often called cable. The fundamental story here is heavily influenced by the Bank of England's policy and UK economic data. With inflation still a concern in the UK, the BOE's tone on future interest rate hikes or cuts is critical. Any surprisingly strong or weak economic data, like GDP or employment figures, can cause significant swings in this pair. As with the euro, the Fed's stance on US interest rates is the other half of the equation, making US data just as important for cable traders. Keep an eye on the economic calendars for releases from both the UK and the US. From a technical standpoint, GBP USD has been showing some interesting price action. We've seen a strong level of resistance around the 1.28 area, which has capped previous rallies. On the downside, there's a solid support zone near 1.26. The price is currently caught between these two major levels. A breakout above 1.28, especially on high volume, could indicate that the bulls are back in control, with the next target potentially being the 1.29 or even the 1.30 handle. However, if the price fails to break resistance and falls below the 1.26 support, we could see a deeper correction. The moving averages are also telling a story. A crossover could confirm a shift in momentum. I'm looking for clear price action signals, like a strong candlestick pattern at one of these key levels, to guide my trading decisions. Don't get caught in the chop in the middle of the range. Next, let's turn our attention to the US dollar versus the Japanese yen, USD JPY. This pair is in a unique position. The massive interest rate differential between the US Federal Reserve and the Bank of Japan is the main driver. The Fed has held rates high, while the BOJ has maintained its ultra-loose monetary policy for a very long time. This difference makes the dollar more attractive to hold than the yen, which has been fueling the pair's long-term uptrend. However, the big question on everyone's mind is intervention. The Japanese Ministry of Finance has shown it's willing to step in and buy yen to support its currency when it weakens too much, creating sudden and sharp drops in USD JPY. So, while the trend is your friend, you have to be extremely cautious of potential government intervention, especially as we approach historically high levels. Technically, USD JPY has been in a very strong and persistent uptrend. The chart clearly shows a pattern of higher highs and higher lows, too. The immediate challenge for bulls is breaking through the recent highs, which are acting as psychological resistance. Every time we approach these levels, the market gets nervous about intervention, causing some profit-taking. Key support can be found along the ascending trend line that has guided this rally for months. A break below this trend line would be a significant bearish signal, suggesting the uptrend might be over. Until then, the path of least resistance appears to be upwards, but trading this pair requires extreme caution. Using trailing stops is a wise strategy here to protect your profits from a sudden reversal caused by intervention news. The risk-to-reward ratio for new long positions at these highs is becoming less favorable. So, how do we trade this information and, more importantly, manage our risk? First, never trade without a plan. Before you enter any position, you must know your entry point, your stop loss, and your take-profit target. Your stop loss is non-negotiable. It's your protection against a trade going badly wrong. Second, position sizing is crucial. Never risk more than 1 to 2% of your trading capital on a single trade. This ensures that a few losing trades won't wipe out your account. Remember, trading is a marathon, not a sprint. The goal is to stay in the game. Third, be aware of the economic calendar. Major news releases can cause extreme volatility. Some traders prefer to avoid trading during these events, while others specialize in it. Whichever you choose, make sure you know what's coming up. Finally, remember that technical analysis is about probabilities, not certainties. A perfect setup can still fail. That's why risk management is the most important skill a trader can have. It's not about being right all the time. It's about making more money when you're right than you lose when you're wrong. To recap our outlook, for your USD, we're watching the range between 1.0750 and 1.09. A breakout is needed for a clear direction. For GBP USD, the key levels are 1.26 and 1.28. Again, patience is key until one of these levels breaks. And for us, JPY, the trend is bullish, but the risk of intervention is very high, so trade with extreme caution. Always be prepared for the unexpected. The market doesn't care about our opinions, it does what it does. Our job is simply to react to its movements in a disciplined and systematic way. Don't try to predict the market, try to follow it. That's our analysis for this week. I hope this breakdown helps you navigate the markets with more confidence. Remember, education is an ongoing process in trading. Keep learning, keep practicing, and stay disciplined. If you found this video helpful, please hit that like button. And if you haven't already, subscribe to the channel and turn on notifications so you don't miss our future market updates. Let me know in the comments which currency pair you're watching or if you have any questions. Thanks for watching and happy trading!